Hello, everyone, and welcome to Schwab Coaching. My name is Cameron May. I'm a senior manager and education coach here with Schwab, and this is Advanced Charting Techniques. And today we're going to be using a tool that's found right there on the Thinkorswim charts that's been used by traders for 64 years now in their efforts to identify highs and lows on a chart and plan all sorts of trades. It's actually called Keltner Channels. I'd like to know if you're watching this live session, chat in, let me know. Are you familiar with Keltner channels? Have you used them in your trading? You don't have to reveal anything if you don't want to, but are you familiar with it? Let's leave it at that. Yes or no? This is going to be a good discussion. We're going to talk about how they're built, how they might be used to plan a trade. We'll try to slip in an example trade before we're done, so a lot to cover. Before we can get to that, though, let me first of all say hello to everybody. It's already chatting in. Hi there, out there in YouTube land. Duke of Foxborough, PR451, Chris B, Will, David, Scott, Ocean Life, Frank, Wayne, Mike, Eric, everybody else. John, thanks for being here week after week. We always do appreciate your attendance and your contributions to these discussions. If you are here for the very first time, though, I want to welcome you as well. And that applies to those of you who are watching on the archive. Welcome. If it's your first time, it's great to have you on board. And yes, if you are watching the archive, enjoy the presentation, but be aware that you're invited to join us in the live discussion. This is a Friday webcast series, and this one kicks off at 1 o'clock Eastern time. If you'd like to join the live stream, we'd love to have you here. And I also want to let you know, my very good friend Connie Hill is hanging out in the chats here with the live stream audience. Connie's going to be addressing any questions that I can't get to. She brings a wealth of knowledge and experience to this discussion as well. Another one of our great presenters. Thanks for being there, Connie. But as we dive into this, I notice a lot of you saying no. So Chi-Chi says no. Craig, no, that is not familiar with what Keltner channels are, how they might be used. Eric, no. However, we have Chris B, yes. We have Wayne saying yes. We have, SD says, never heard of it. Bollinger Bands, yes, that's interesting because actually similarities there. So this should be a good discussion with the hundreds of people that are going to be seeing this. Either live or possibly thousands on the archive. I'm going to try to, even though this is an advanced discussion, try to go at a pace that everybody can follow. We want to make sure that we understand the indicator and how it might be used for the planning and execution of typically a short-term trade. But before we can get to any of that, though, first thing that we'll need to do is consider the risks associated with investing. Risks are real. These are important disclosures, so bear them in mind. The information here is for general informational purposes only. It should not be considered an individualized recommendation or endorsement of any particular security, chart pattern, or investment strategy. Schwab does not recommend the use of technical analysis as a sole means of investment research. Investing involves risks, including the loss of principal, and any investment decision you make in your self-directed account is solely your responsibility. So with that said, let's set an agenda for the day. So we're talking about Keltner channels, which are used by some traders to in their efforts to identify price floors and price ceilings, entries and exits on a stock chart. So we're going to talk about how Keltner channels are built, how they might be used to plan a trade, and we're going to try to place an example trade before we're done. So let's go right to the Thinkorswim desktop software platform. And I'm going to start off with an examination of how Keltner channels are built using the S&P 500, because some traders do use this indicator to identify short-term lows and highs on indices like the S&P 500 and possibly even trend reversals. We'll talk about that as well. So I'm going to be, and Ricebird says, hey, look at that. We have, I got to hit the pause button here for just a moment as we dive into this discussion, because we're being joined by our Orlando crew out there at the workshop, Ben Watson. Hello there, Ben. Say hi to Ray and Scott for me. But yeah, we have a new audience of several hundred people, I would guess, joining this discussion for a few minutes to see how these webcasts work. So hello out there, everybody in Orlando. We're talking about Keltner channels. We're going to talk about how they're built and how they might be used for planning and placing a trade. So back to the discussion here, we were just about to add the indicator to the chart. So let me guide us through that process. I'm going to come up here to the little flask icon at the top of the Thinkorswim charts. I'm going to click on that, and we could go down in alphabetical order. I'm just going to do a quick keyword search for K-E-L-T, Keltner channels. I'm going to choose that from our menu, add that to our chart, and then I'm going to click apply. Now, as I go to click apply, though, before, Ken says Ben is rocking it in Orlando. There's no doubt about that, Ken. We all know Ben does a fabulous job. So do Ray and Scott. But I want to make a couple of quick points here about the characteristics of the Keltner channel. You'll notice here, as we go to apply the indicator, there's some numbers and some words here: 1.5, 20, close, and simple. So these are going to be important. Just make a mental note of 1.5 and 20. And these are used, this indicator is among those that it's used, that's constructed using closing values on a chart. And it does use simple moving averages. All right. So let's click apply now. And as we do that, we click OK. We're left with 3 lines. And this goes back to the observation. Somebody said, I've heard of not Keltner channels, but Bollinger Bands. As I load this up, yeah, Michael says you love Bollinger Bands. SD says you've never heard of these, but Bollinger Bands, yes. Why did somebody mention Bollinger Bands when I asked about Keltner channels? Well, they do at first glance, and actually goes a little bit deeper than just first glance, but share some similarities between Bollinger Bands. Well, there are similarities shared between Bollinger Bands and Keltner channels, but the construction is quite different. Okay, I'm not going to go into a side-by-side comparison, but I will acknowledge, yes, they are pretty similar and actually used in a similar way. I will say there's not typically squeezes that are looked for using Keltner channels, unlike Bollinger Bands, where that's a primary potential signal. So let's talk about the construction of Keltner channels. You'll notice there are 3 lines. There's a central line, which is a 20-period moving average. That's a simple moving average. And then there's an upper band displayed here in purple and a lower band displayed here in red. So let's outline how this thing is constructed. So I'm going to abbreviate this to the KC. Now let's spell it out. Keltner channel construction, not construction, construction. There we go. So first of all, we have the middle line, which is simply a 20-period simple moving average. When we're looking at the characteristics of the Keltner channels, and here we can see those again: 1.5, 20, close, and simple. The simple is referring to the fact that this indicator is constructed upon, really anchored by, a 20-period simple moving average. If you're not familiar with a simple moving average, I'm not going to go deeply into how those are built, but basically it's this green line which shows us over time what the average trailing closing value of the S&P 500 has been. We're using the S&P, so I say the S&P here. So when we see over here this number displayed in green, 5990, I'm going to round that to 5991. That's basically just telling us that as of right now, looking back over the last 20 days, the average closing value of the S&P 500 has been around 5991, right? And if we were to go back further in time, if we were to go back to May, the average closing value over a 20-day trailing period on the S&P 500 was much lower. So our green line was lower, and back then it was probably around 5084. So yeah, over time, average values change, and that generates this simple moving average line. Now, let's see. Truth will always prevail says Keltner used an ATR instead of a standard deviation as compared to the Bollinger Bands, right? That's exactly right. So what are the other 2 lines? We have our upper line, or referred to commonly as a band. We have the upper band and then the lower band. The upper band does start with that moving average, but then it adds to it, yes, an ATR, truth will always prevail, times what we'd call, and I'm going to need a little bit more space here. Let's pull this out a little bit so I can fit this on here, times what we call a multiplier. So let's give a little more attention to this little part of the equation. First of all, what is an ATR? Most of you are probably familiar with an ATR, but an ATR attempts to address for a trader this question. I wonder how much this stock tends to move in an average day. Over a 24-hour period, how much does this stock tend to move? And that can have all sorts of implications for the trader. Let's suppose we're just trying to place a target or a stop. And how about let's just throw out an imaginary trade here. Let's say we're buying a stock for $100, and the trader has decided, well, I'm going to put my stop at 99, $1 below my entry. But if they took a moment and looked back over, let's say, the last few weeks, and they found out, wait a second, just in 24 hours on an average day over the last few weeks, let's say this stock has moved $5. How precise does their timing have to be if they're only giving it $1 worth of wiggle room on a stock that tends to move $5 over an average 24-hour period? You can see how that could say that might signal the trader, boy, you're using an awfully tight stop. Maybe it's okay. Maybe the trader's that good with their timing, but that's just one potential application of an ATR. So ATR stands for the average true range. I think of it as the average trading range. That's not what it's called, but that's the way that I think about it. And specifically, it's over a 24-hour period. The average trading range over a 24-hour period, and specifically over the last 14 days, or about 3 weeks. So what this indicator does, how the Keltner channel builds that in, is it takes that average range and then multiplies it by what's called a multiplier. So what do you think that multiplier is as we look back up here at the characteristics of our indicator? 1.5. Yeah. So what this does is it takes that simple moving average and then it draws another line above that simple moving average that is 1.5 times the ATR above the moving average. So if we want to run a quick calculation here, you'll notice right now the value is about 6057. I'm going to use some rounding here because the S&P 500 is kind of a bigger number. But let's take our simple moving average, and I'm going to add an ATR to our chart. Let's apply. So I've just selected the ATR from my list of potential studies. Apply that to or let's actually select it first. And now apply that to our chart and click OK. And we're left with this purple line. But basically what this is telling us, if you see the number 45 here, this is telling us over the last 14 days, the S&P has moved about 45 points on an average day. Basically, if we were to look at basically close to close, how much has this traveled as a range from its highest point to its lowest point in an average day? So it gives us an indication of how volatile the S&P 500 has been. And then our equation here simply takes that 45-point value and multiplies it by 1.5. So let's do a quick calculation here. 45 times 1.5 is going to give us what, 67? 67 and a half. I'll just call it 67. And then it's going to add that to 59.91. So 67, let's do 59.91 plus 67 means that our upper band is going to be in the neighborhood of 60.58. And as I go over here, what do we see that? Let me get this out of the way so you can see our line there. Can you see that? Yep, 60.58. If you look at the number in purple with a little bit of rounding, that's where that comes from. It's our moving average plus our ATR times our multiplier. In other words, our moving average is 59.91 plus our ATR of 45 times our multiplier of 1.5. So it's building in an adjustment for the inherent recent volatility of the S&P 500 to gauge for a trader, well, when the S&P goes up, how far is sort of an extreme move to the upside? Or how far in the short term is an extreme move to the downside? That brings us to our second band. So I'm going to copy this. And what do you suppose the lower band is? Just here, our lower band. Whoops. Let's scroll that back up there. Is equal to the moving average minus the ATR times the multiplier. So we take the 59.91, take our, it was 67.5. That's our ATR times our multiplier. Subtract 67-ish from 599.1-ish. Let's do it. 599.1 minus, why am I saying it that way? 5,991. minus 67 should mean that our lower band is around 59.24. And as I point at these, you can see, hey, look at that. There's our value, 59.24, if you see that number in red. So I like to show for our new users of a new indicator, I don't like to talk just about the concept of how it's built. I like to show, precisely how it's calculated. Now that we're comfortable with that, and of course, if you want to go back and revisit that, you can just go back to the archive and look at it. We don't necessarily need that ATR on there for the rest of this discussion. So let's remove that. And let's move on to, that's how it's constructed. How might it be used in the planning of a trade? Well, right now we're looking at it on an index. So let's talk about this index as though it were a stock, but that doesn't mean that this doesn't have value just in analyzing potential highs and lows on an index. But the first thing that a trader might look for, as they do typically with a simple moving average in any case, is which direction that moving average has generally been going. So if our moving average is rising, meaning that average prices over the last 20 days have generally been increasing and actually stretching back further than that, if we see this moving average rising, do you think our trader is more likely, if they're a trend trader, leaning toward bullish trades or bearish trades? Oh, James, it was great meeting you out in Miami too. Thank you. Yeah, I got the opportunity to go out to the Miami event just a couple of weeks ago. I met a lot of people. That was great. I probably had 30 or 40 people come up and say they'd been watching the webcast, which is fabulous. Great meeting. Putting a face to all these names is something I don't frequently get to do. Anyway, but yeah, if that moving average is rising, the trader is, if they're looking at a stock, probably looking for potential bullish entries. If they're looking at an index, they may just be looking for bullish reversal points, trying to identify lows. So let's talk about our first potential system for trading Bollinger Bands, okay? These are potential. Did I say Bollinger Bands? Look what you did to me. Keltner Channels, potential Keltner Channels systems. Trading, not systems. There we go. But number one is when our moving average is rising, but price has been moving the opposite direction. So price is falling against a rising moving average. If it falls down far enough that it goes down and touches that lower band, for some traders, they may consider this to be in sort of an extreme oversold condition in the short term. And if price subsequently starts to rise off that lower band, that may actually signal an entry. Now, on an index, it might just signal that it's time to go look for entries on individual stocks for that trader using Keltner Channels. But yeah, a bounce, this is how we might specify this. Buy on a bounce off the lower band. Let me phrase it just a little bit. Buy bounce on the lower band. So we've seen some examples of this recently where the S&P 500 has been going up. We come down and touch that lower band and start to bounce. Here, the trend line, the moving average is down, so this may not have been seen as a legitimate entry here or here. But here's another one, rising moving average. We go down to that lower band and start to bounce again, start to get white candles off that lower band. There's an example, and here's another recent example. But if the lower band represents a comparatively low extreme, an oversold condition, where might the trader look to take profits on an entry here? Truth will always prevail. Yeah, we have lots of choices here, right? Yeah, this is why I go into so many of these, because we have so many choices of indicators on Thinkorswim. I like to just explore a good range of these. My purpose here is not ever to try to convince anyone watching that this indicator is the indicator for your approach to your portfolio. Nope, I don't know you. I don't know what you want to do with your portfolio. But instead, if there are tools available, we want to understand how they're built, how they might work. And then it's up to the individual trader, if they're going to use them all, to choose which ones are going to be appropriate for them. Yes, but if we look at the lower band as a potential lower extreme in the short term, in the planning of a short-term trade, where do you think profits might be taken? Yeah, but if the trader is expecting a reversal of momentum coming off this lower band, a plan to take profits may be to exit if we can get back up to that upper band. So buy the bounce on the lower band, and then, let's phrase it this way, sell upper band. This is to take profits. This is if the trade works. Does any indicator deliver the certainty that the trade is going to work? Of course not. Yep. Every trade has the potential to fail. You know, this one, the trend might have been a little bit in question here, but let's say the trader took an entry here on a white candle as we were at or near that lower band, and then it faltered. We started to fall. Where might the trader sell in that case, where the trade is not working? Well, in that case, they might just sell below a recent low. So this first, before this forward slash, this portion is for managing profits for traders who use Keltner channels. This is a potential exit for managing losses. So for example, on this entry, let's just consider this a stock trade, although it's an index. We're just using this for an example, learning the indicator for a stock. Well, we got a bounce here, and in this case, it ran up to its upper band. But what if instead, what if instead it were to sag lower? Well, if it were to go back down below whatever the low was, as the stock bounced off that band. So, for example, in this case, here was a low. If it went just a little bit below that, maybe a half a percentage point, maybe a percentage point, not a lot, but just down below that low, that may be a signal that this Keltner channel bounce isn't working out. Yeah, Duke of Foxborough, wouldn't that be nice? If I can find that indicator that delivers every time, believe me, I will be thrilled to bring it to you. I just haven't found that indicator yet, and I doubt that I ever will. So we plan for both sides of the trade as a consequence. Trade might work out or it might not. But this is a common system for trading Keltner channels. Look first of all to the trend as a qualifier for an entry. An upward sloping moving average, we might be planning a bullish trade. A downward sloping, could we be planning bearish trades? Yeah, conceptually, we certainly could. Now, that's one potential system. Let's move to a second system, because you may notice we have examples of bounces off the low band here. We have a bounce off the low band here. We have a bounce off the low band there. But sometimes the indicator doesn't, or the price doesn't reach the lower band of the indicator. Instead, you can see that it can hit pause points just at the moving average itself. Have an example here. Have another example here. We have another example here. But we might look to buy the bounce on the moving average itself. So I'm going to abbreviate that to MA. Is that guaranteed to work? No, of course not. So where might we sell? We might sell. This is a little bit different. When there's a pause at that moving average, what that commonly means is that we're just, well, it could be interpreted this way literally. There's a shallower sell-off. There's not as much selling momentum, so there may be just continuation of previously existing bullish momentum. In any case, it's commonly a signal that we might have, let's say, a bull flag in play, or there might just be a measured move trade in play. So if you look at this most recent example on the S&P 500, look what happened just before that. Does that look sort of bull flag-ish as we came down to that moving average, or here? Yeah. Now, it's not always a bull flag. But the point here is a trader very commonly will say, well, we're bouncing off that moving average. didn't get all the way down to that lower band. And so what they'll do is look at the most recent move and measure it. So that's why it's called a measured move exit. So in this case, they might look to see, looks like we went from about 54.20-ish up here to about 57.50-ish. I'm going to have to do some rough math there. That's about 330 points. And on the bounce entry, they may look at the low that was established there and maybe look to get out if we can get up another 330 points or a distance equivalent to, let me do this on the most recent one. Let's duplicate this most recent move. And that may help us visualize where a target might be on this exit. RG say, would it would not be better to take profits when it crosses down through the upper band? So RG, you're saying in this case, now, is this exploring the possibility that there can be flexibility in the interpretation and the application of an indicator? Of course there can. Traders should always feel empowered to create their own system using whatever their preferred indicator is. I would encourage you to explore variations on the themes that I discussed today. Rather than just, buying at the lower band and selling at the upper band, for example, could we buy at the lower band and do a quicker trade just to the moving average? Could we see if, as maybe RG is proposing, if it gets up to that upper band, but it's still going, why don't we just let it run? And then if it happens to break down through that lower band, break down through that upper band, maybe then take profits. Are there different variations on these themes of planning for profits and planning for losses? Yeah, there definitely can be. Yep. Okay, but when buying a bounce on the moving average using Keltner channels, quite commonly we might look to sell the, now I'm trying to talk and type at the same time. It's never a good idea. But in any case, sell the measured move. That's to manage profits. How might we manage losses? Well, actually, it's going to be very much like the previous signal. Just look to get out. The purpose of getting in is that we've apparently established a low, and it looks like prices are going to start to rise again. If instead prices fall back down below that low, we might just get out. So let me zoom in a little bit so you can see. Oh yeah, I've zoomed in here. Hold on a second. Let me reset this. Change that to auto. There we go. Anyway, but let me zoom in here so we can see this in a little bit finer detail. And we'll notice there was our bounce entry right around that moving average. If we break that back down below that low, the trader might not be very patient with that. Now, that might mean, and this is something we have to prepare ourselves for when trading moving average bounces using Keltner channels. If we get out, are we still above that lower band? Yep. Is there the possibility that this might just be a little bit of a retracement down to that lower band? And we just got out, and then the stock bounces and starts to rise again. It leaves us on the corner, watching the bus take off, going in the direction we wanted to go. That's a possibility. Yep. So here's another recent example. There's the recent low, and maybe getting out just below that low. So a couple of different ways that a trader might plan for a Keltner channel system. This is not an exhaustive list of potential Keltner channel systems. But there are some other things I wanted to discuss regarding Keltner channels. Let's switch up our chart here for just a moment. I'm going to go to a MasterCard and talk about how Keltner channels might also be used to identify reversals in the trend. So look at this period right here on MasterCard. I'm going to close up this left column so you can get a little bit wider, less compressed view of MasterCard. You can see that our simple moving average is rising. Our channel is drawn above and below that moving average. Our trader might see, oh, there's a potential entry right there. There are actually entries all along here. One here, one there, one there, one there, one there. Showing up, here's one that starts to fail. But Keltner channel traders tend to keep a keen eye out for new developments with the indicator, and a trend reversal is commonly identified by a close outside of the lower band, of the bands. We'll just say it that way. in the opposite direction of the trend. So in this time frame, our trend is going this way, was going that way. It's not uncommon for price to come down against that trend. However, more significant to Keltner channel traders is if price closes below, in this case, below the lower band, opposite the direction of the previous trend. You see that there? That may signal that a trend reversal is underway. And now we're just moving in the new direction. And then look what happens right here on July 31st. Here we have a downward trend established. Sometimes, notice if we rely just on the moving average, it can be a little herky-jerky, a little too whipsaw. You know, it's going down, now it's kind of going up. Now it's going down, now it's going up. Now it's going down, now it's going up. But to a Keltner channel trader, those are not really significant changes in trend. What is more significant is when the price closes, in this case, above the upper band. That may signal that there's a new, heavier change in momentum that may drive price in a new direction. It's not guaranteed to drive price in a new direction, but that's how trend reversals might have been identified by a Keltner channel trader. So after this event, what kinds of entries might we be looking for? Well, these might be new bullish entries. So there's a bullish bounce here and here and here, and there's one down toward the lower band there. There's one right here on the moving average. Just remember, this signal may have a plan to exit at the upper band. These signals may be using measured moves. Like here's a measured move here. Here's the measured move before this one. Here's the measured move before this one. So there's a pullback here. So measured move here might stretch all the way back to there. This one might be like this. Just using those to gauge how far the next move might be. So some really interesting examples. This is, and it might be useful if I were to type this out for you. Why don't we do that? How about potential KC, not BB. I tried to say KC and BB at the same time, and I wound up with KB. Potential KC trend reversals or trend signals. Just breakout against the close below or above the bands in the opposite direction. Right. So with this, just with this little summary, we're starting to get a pretty good feel of how Keltner channels are constructed, how they might be used to plan and place trades. So how about we look at another example, and then maybe we'll come back, we'll circle back and have take a shot at placing trades. So I'm going to switch this up to Apple for just a moment. And here's our Keltner channel applied. Looks like we had a close against the trend down here. Where was our close against the trend down there? In this case, the trend didn't really pan out. It decided to just go sideways. But I think Apple is a good illustration of how, for some traders, they might look at Keltner channels and decide this stock seems to be more volatile than others. And even with the adjustment, usually using an ATR is an attempt to modify the indicator from one stock to another, because the ATR on Apple is going to be different from the ATR on MA. It's going to be different from the ATR on SPX. And so it's an attempt to customize. But for some traders, they prefer to customize the indicator even further. So with Apple, as an example, maybe those entry signals are coming a little bit late, and maybe the exit signals are coming a little bit soon. Let me see if I can find an example here. Maybe back here, you'll notice our price actually fell outside our lower band. And so we might have been waiting for price to get back up into that band before we get our entry signal. And then it pops up and pretty quickly, is at that upper band. If I wanted to widen these bands, how might I accomplish that? For those of you who are the tinkerers in the audience and you like to customize indicators, how are indicators typically customized? Well, one way is to change the length of the indicator. That doesn't always work in the intended way with Keltner channels. That could be one way to do it. But another way is to change the ATR being used, or the ATR multiplier. I'm going to come up to our indicator. Let's click on our edit studies here. Yeah, Duke of Foxborough. Change the multiplier is what they proposed. I'm going to come up here and click on our edit studies icon. And our multiplier right now is set to 1.5 ATRs. We take the average price, range in price over the last 14 days and multiply it by 1.5. Well, what if we multiplied that by 2 or 2.5? Let's edit that. We can edit an indicator by clicking on the little gear icon here. I'm going to click on that gear. Here's our factor. That's our multiplier. I change this to 2 or to 2.5. Maybe we'll experiment with both. So I'm going to change that to 2 for now. Click OK. And as I click apply, let's do this. Keep your eye over here so we can see the impact. What we should see is the green line stays in exactly the same place, but our purple line should go up a little bit and our red line should come down a little bit because it's going to be taking our ATR. I don't know what the ATR of Apple is. Let's say it's $10. Well, if we took $10 and we multiplied that by 1.5, that would be giving us a line $15 above and below the moving average. If we multiply it by 2, it will give us lines or bands $20 above and below. So let's click apply. Again, keep your eye on these bands over here. Click apply. Did you see that? That has widened now. So what that's going to do is provide maybe fewer entry signals, but possibly of higher quality. That's the objective of the trader. It also is going to extend that exit up a little bit, allow us to stay in the trade a little bit longer to try to squeeze out a few more pennies or dollars of profit if those profits manifest. Is it always going to work out? Nope. Is it sometimes going to cause us to just miss a good exit because we're waiting a little bit too long? That's a possibility. Yeah, but for some traders, they prefer to customize the indicator a little bit. So yeah, so an example here might be we're touching off our lower band right here. Let's see, we have an example here. We have an example there. Where might we be looking to take profits? Up here. Looks like if we didn't get that one, maybe we got it there. Or right here. Now, we might alternately be looking for bounces off our moving average. So if we took a bounce here, we might have looked at this measured move. We didn't get there. If we got a bounce here, we might actually be looking at this measured move, and we actually got that one. So this is one of those indicators, like almost all indicators, can be customized to suit the trader's preferences. Not every trader tailors every indicator. But let's switch this back. I did want to have a discussion of customizing. Click OK, click apply, click OK again. Gazelle says, does going above the upper band for Apple mean a new trend or a sign to be cautious? So actually, Gazelle, that's a possibility. Now, another thing that a trader might look for is when we have a downtrend, we get a break above the upper band, that might be a signal of a new uptrend. If we have an uptrend, we have a break below the lower band, that might be a signal of a new downtrend. What about if we have a sideways trend? And that's really what we've been looking at on Apple. Yeah, in this case, a break above the upper band, particularly if it takes us above recent highs, that may be a signal of a new upward trend. And that just might mean that if a trader was, let's say they were previously looking to enter bullish trades and bearish trades because they considered the trend to be sideways, well, now they may, for example, just move to exclusively bullish trade plans. All right, but how about we have a little bit of time left? Let's go plan a trade. So here we have MasterCard that is bouncing off the moving average. So that's considered a legitimate entry by Keltner Channel traders. Where might profits be taken? We might look at the recent measured move. In this case, it looks like we went from a low down here of 510 up to a high up here at 536. That's about a 26-point move. Let's draw that in there. 26-point move from here to here. So starting here, maybe the trader is looking for another 26-point move. What was the low of that day? Low was around 518. Yep. So a 26-point move off 518. 518 plus 26 might give us a plan to get out at 544. Well, if we break back down below 518, maybe the trader gets right back out again. It might only be if it gets down to 517 or 516. How about we just say 516? So plan to take profits at 544. Plan to take losses at 516. Interestingly, I didn't do this math before. That's going to be exactly, in this case, a 1-to-1 reward to risk ratio. That's probably, let me just clean this whole thing up. Let me clear this whole drawing set. It's because the stock has moved so far off this recent low. And also, you combine that with the fact that this wasn't a terribly large previous measured move. It means there might not be a lot of meat left on the bone compared to the downside risk, but I'm going to place the trade anyway, just to show how this trade might be placed, if the trader's okay with that. So I'm going to right click here. I've just gone to the trade tab. Let's make sure I have the right symbol here. Let's right click on the ask price. It also works on the bid price, but we're going to put in a custom buy order with an OCO bracket. That puts in an order to buy a certain number of shares. Let's link these orders together so the quantities will match with the buy and the sell. How about we just do 10 shares since this is $530 stock? That's a $5,000-ish trade. I'm going to put in a market order with a plan to sell at a limit up there at 544. That's our target. And our stop down at 516. I'm going to make both of those good till canceled sell orders. And there's our trade plan. Let's click confirm and send. We're going to buy 10 shares of MasterCard at the market. With market orders, of course, prices can change quickly in fast market conditions, resulting in execution prices that can be different from quotes displayed at order entry. So yeah, we're not guaranteed to buy it exactly 530 bucks. Could certainly be more. Then we're going to sell if we can get to our target of 544. That's our limit. Or we're going to sell at a stop of 516 as a activation price. Now with stop orders, there's no guarantee that the execution price will be equal to or near the activation price. But I'm going to send that order off, and we'll see if we get to 544 or 516. But guys, we've done it. We've talked about what Keltner channels are, how they're constructed, how they might be used to plan and place a trade, two systems, plus trend reversal signals, and we even place an example trade. So hope you enjoyed this discussion. This is what we do on Fridays. We get a little deeper into technical analysis, including customizations of indicators sometimes. But I do want to make you aware of other resources that are available to you outside of these webcasts. Make sure you're taking advantage of these resources. Number one, follow us on X. Connie can be found on X at Connie Hill CS. You can find me there at Cameron May CS. Doesn't cost anything to follow us, but it's the best place to connect with your favorite presenters in between the live streams. And also make sure that you're subscribed to our Trader Talks channel. This is the best place to find our playlists of previous webcasts. And of course, you can join our live stream. Just don't go down and click on the subscribe button right now. Only takes a second, doesn't cost anything. And these are fabulous resources. Everybody, thank you for joining us today. With the 179 people that are on the live stream right now, I can see that 48 of you have already clicked that thumbs up, that like button. If you like your webcast, click on that like button. It's always appreciated. And it gives a boost to the webcast, to the presenter's webcast in the YouTube algorithm, helps them find a wider audience. So thanks, Connie, for helping out there in the chat. Everybody, I will look for you in a future webcast. I'll also look for you on X. I want to wish you the very best weekend. But whenever I see you again, until that moment arrives, I want to wish you the very best of luck. Happy trading. Bye-bye.